All right, graduates, it is Wednesday, and so we're going to actually start off today with our big money, see what it is that people came in with, especially throughout this week, and start off over there. There'll be people that'll join as we go. So I know there's a couple of you guys that are watching after the fact. Be sure to let us know what you think. Go ahead and chat in ICA graduates, because again, this is meant for you guys. But let's see, SPY, we do, near the end of it, we had some lower scores, but we did have these pretty higher ones that started to come in near, as SPY started to extend up toward, 400, you can expect that there's that psychological resistance there. And it did bounce a little bit, and then it went a little bit higher. So we'll see how these play out on the bigger picture. What I'm starting to notice is that big money is starting to take a little bit more time, pretty much, right? You notice this right here where you ultimately have it till September. So let's give that some extra time on there. You do have some 100-point scores in here. For SPY, I would categorize anything over 5 mil to be extreme big money too. So keep that in mind. There's 2 of those in there. Sweep is urgent, put, and here $20 below. So think of it that way, that they're expecting it out of the money. All right. 666 is where they last traded at. Okay. Same with this IWM. IWM, there was 100-point score. This is starting to get closer and closer now, you might imagine. This is only about 10 points out of the, not even 10, 8 points out of the money. And 2 mil for IWM, that's pretty decent. This shorter, right? Shorter term. So showing that they are willing to take on a little bit more risk. Apple extreme long term, that's what gives this one a very low score. But they got far in the money. Okay. I haven't quite done an in the money. So I'll right. Call that in the money. SWIR, we'll take a look at that. Google. So Google jumped up a little bit. We'll talk a little bit about earnings. I keep warning you guys, if you're going to do earnings are your own risk to take. They definitely are not an easy situation, because it's hard to tell whether or not things have been, effectively priced in before the fact. So those were mostly for today, right? Shopify, let's see, Shopify had their earnings. Right, Shopify, a mil bet against it. That's a high score. They bought some time too with that. VXX, AWM. So well, let's go into our charts today. All right, let's do that. What you guys are here for. All right, first off, I know this is going to be a little bit messy. I'm going to delete a few of these things that we don't really need. Okay. First off, what I want to point out is this was my original fib channel. I'm actually going to teach you guys and draw this on our own charts for you, so you can follow along with me on this blank, more blank situation. But let's start completely over, even though I have a couple things on here. That's minor. So what's going on in here? We do have this relief rally going. Right up here is where we had our peak in January. And what I want to point out is we're now going to apply what we understand about Elliott waves, okay? And what I want to categorize is there's essentially, right, shelf 1, shelf 2, like we've been talking about, from alpha trends and from the Wyckoff. But also what we have, let me go ahead and show you, is we do have our impulse wave going down. Now we do have a one, okay, and our relief here, I want to point out, this one can be argued that we went back toward the 1. So let's do that. That's 1, 2, 3, 4, 5. You also have a correction wave, A, B, and then C went a little bit longer. I want to point out how that extension, you can imagine A, B to C usually is about the same, but we did have an extension almost to 0.618. You could argue though, more so that, well, I'll show you the A, B, C. It's not the best. A, B, C, A, B. And you could argue with that one, but that looks the best. So 1.618 for the extension. Then notice this, right? We had another big move down. And it's a similar shape. This ABC is a little bit easier to see. So you still could go higher. Keep that in mind. That full supply doesn't exhaust up until right there, right? Those people are already done with it. So next 408 is still possible, but we did rise pretty quickly. All right, so let me show you this. So this, if I just copied this over, right? Just copied this over. There is the argument that it started there. So this could be your, that was what I was saying earlier, C. So that one's not the prettiest, but 1, 2, 3, a bigger, but this measurement. Okay, so you could argue with me that 3 wasn't there, but instead, that's the 1, 2, 3, okay. And so if that's the case, what we're pretty much doing right now could be something like that. You know, if we go through a similar pattern. Now, on top of that, let's delete some of these things. We'll leave the prediction down there. We don't need 2 of these. So you have one phase over here, right? Phase 1. You could say phase 2 still has some time for it to play out, right? If you're thinking time frames. It doesn't have to hit it exactly, right? And then let's add on that Fibonacci that I wanted to teach you guys. We're going to do fib channel. We're going to find the bottom. You'll notice the bottom is really where the 3s and the 5s are hitting. So let's clear these guys. We'll add those back on later. Bottom, bottom, bottom. So we want to use and try to, I'll adjust that in a moment. Oh, let that not draw. So bottom touches the bottom there, touches our bottom here. And let's go ahead, just adjust a tiny little bit. And let's find our first big move. I notice, remember, our first big move you can measure is this guy or even this guy, right? And so I'm just gonna bring that gray line, which is 1, all the way down. That's 1, right? So now that we've broken above 1 over here, we are headed to 2.236. That's a real possibility. All right. Breaking down below is where you see you start headed down. So again, back in here, let's go back and put those Elliott waves back on here. 1, 2. Oh, I did too far. Let's do that. Okay. And then our ABC. That's not it. There we go, right? And that was another possibility because you could call that a very large ABC. Not the prettiest. A, B, C. Okay. All right. So let's talk a little bit about what happened today. Today's price action was really interesting because we started off with this gap up. I could go in here and talk about the daily here. Here's right where the Fed meeting started. I'm going to point out this is where the Fed meeting started. And they did raise the 75 basis points and everything popped, right? And a lot of people are asking me, Eric, isn't that a bearish signal? And yes, while it is a bearish signal, you want to keep in mind, when we zoom out on the bigger picture, because sometimes people understand what's supposed to happen and they do things ahead of time. So, where was our last Fed meeting? Let's pull this back up real quick. Our last Fed meeting, you can imagine, was this red line, right? And that was 75. Here's another 75 here too. But were they anything surprising to the market? Or could you imagine the market knowing beforehand may have priced it in before, right? It's always hard to tell exactly how much the market has priced in themselves. But also there are so many people so bearish here too. You want to keep in mind when there's a lot of bearishness, okay, or even a lot of bullishness, there can always be a very quick movement in the other direction. Why does that happen? Let's talk about it, okay? So for example, if I had, let's just use this, if I had a big, nice green rally upward, okay, why is it possible that it could have some big red pressure? Well, sooner or later, there's going to be sellers, and those sellers at some point are going to come in real force, right? That's where you get these big drops. Now, here's the problem though. What if you get so much selling pressure, it puts people underwater? And as it puts more people underwater, more and more people want to get themselves out because they don't want to increase their losses, or they've set certain, gateways in their brokerage up to protect themselves, right? Stop losses, for example. So anytime you have a large movement upwards and you have a lot of people that are selling and it breaks certain resistances, it can cause that. Now, on the other direction, if you have something that's been going down for quite a while and all of a sudden prices, you have shorts that start to get out and they start to get out in force, right? They start to sell off quickly, and sooner or later they break a certain area where there were a lot of other shorts sitting, and as a result those shorts are underwater and it continues to short cover over and over and over, just like that. So that's what we mean in terms of if there's lots of sellers or lots of shorts in the situation, short covering can cause a price to go in the opposite direction of what you would expect. So with earnings and with certain catalysts, it's better to sit on your hands sometimes. Keep that in mind, okay? Now, what happened today? We actually filled this gap perfectly, right? We closed right inside of it. So there was just a little bit left above to go. We did break 400. And ultimately, the markets heard today what they needed to hear was, hey, It's 75. It's nothing more than that right now. So we're going to continue business as usual is kind of what it is. We will continue to evaluate certain things because there still are a lot of earnings coming up that could swing. This could swings back down too. Don't forget that. But I do want to point out right now, I see it coming back up to test this line now because our supply of people that would be pushing down is now up here. We did have this resistance now that we've come and we've bounced off of our 50-day average, right? You see that? Now we're headed a little bit further up to retest. But again, we're not completely out of the clear here. We still have additional resistances to go. So this green line is going to come down a little bit too, right? Hey, how are you doing? Good to have you. How's everything been? Just gonna go over some charts here today. Oop, I can
just
hear
me
you.
by myself today? Sorry, I just logged in. Sorry, I just had dinner.
That's fine. No, yeah, just you right now. There are some people that are probably gonna watch it a little bit later. So
okay.
But yeah, definitely let me know if there's anything that doesn't make sense or if you want me to clear it up.
No, that's fine.
I was just talking a little bit about how we've got this rally back up. We did close up this gap today. We did, close right inside of it when you consider it too. And I was, just drew these Fibonacci's as well. It would be interesting. We could come all the way up to this red fib, but as of right now, we do have resistance up here that I would expect to come into play. If these people let up and it goes up above, obviously there's more to come. But as of right now, now if you think about it, now people are now going to prepare for the next upcoming Fed meeting, which won't be until here, September. Okay. So what's going on over here? What you ultimately have is you have a similar pattern to what was going on earlier. Let me go into here. I was showing this one. You had your 1, 2, 3, 4, 5, and then you had your ABC. I originally had it drawn here, but I was thinking about it. This very likely could have been your ABC if you wanted to measure A equal to B, which is about here. It says what, 3294, and then from here to here is another 30 or 31. So that would be the A to B. A 0 to A, and then B to C if you look at that ABC, okay? And this, I was showing how this layers very similarly to this, just takes a little bit of different time frame, if you might imagine, right? Very, very similar in terms of the shape that we have. And then so I copied this ABC down over here. And what that ultimately gives us is a short covering rally, very similar to what we're seeing right now. Okay, so let's do this A, B, C in here for the first one. Let's color that as red. You have a B, C in here. And you also have A, B, C up there. That last one's kind of ugly, but the measurements still show, okay? So same with this here. We have A, B, C right now. We've got A, B, C coming down. Now what's going on right here? We can say this is our A, B. We have another C that is similar to that, right? Measurement in terms of movement. Could bring us up to there, okay? So that would be your next targets, but look at that too. Like I said, there's a lot of people sitting right here, and what they did was they pushed it all down, okay? So first expect up to here where you would bounce, and then let it determine where from there, because we also want to remind ourselves that now there's this movement, okay? There's this uptrend. Until this white line breaks, right now we're going up, okay? And now that we've heard from the Fed what needs to happen, now this is just going to react to earnings and what's going on with earnings. Now, with that being said, actually, let's do it in here. Earnings with, let's review, what were the last ones? Let's review our Microsoft. We'll do Microsoft. We're going to do Google. And we're going to do Meta. Talk about that and look at what Apple looks like too. So, let's take a look here. So what happened to Microsoft as well? Microsoft actually gave us bad earnings, but you got to keep in mind too, what is exactly bad here? These numbers relative to other companies and how bad things are doing, they're doing, they still are very close, okay? Out of 100%, they're only, missed by 2%. So their expectations, a lot of people's expectations, so think about Netflix, where Netflix had 2 million subscribers that they expected to lose, and then it only turned into 1 million that they lost. So that was actually a good thing for Netflix in that situation, and Netflix reacted in a positive manner, even though their report wasn't great, okay? Same here. If you look at earnings, the numbers you always want to think are relative, and you also want to consider there's people that know this stuff before us, right? And so the people that know this situation before us, is it possible that over the last couple of days, or even at least over the last 2 days, they've sold off what they need to, or they've bought in what they need to, right? So if it was already expected that was going to go down, well, keep in mind, from the previous earnings till now, anywhere in here could have been people preparing for that, okay? And so, it's always more telling afterwards, obviously, once you look at this, where you do have some pretty good sell-off, and then right now with that, they might have just sold off and this wasn't as bad as they thought. So people came back and they purchased instead. It pushed it back up, okay? So what was really interesting to see though here, if you might imagine, is if you were just to ignore this, okay, ignore that earnings had happened, look at what happened. We got so this still respected these lines to a pretty good extent when you think about it, right? It still came down, bounced off of this. Now it went up here, and now it's up here. So in reality, it's funny. The two drawings I had from earlier in the week both ended up playing out to an extent. When you broke down below, you had a retest, went down, didn't quite hit the whole bottom of this, but hey, you still had some good profits you could have taken. You didn't have to wait till earnings and the next day of earnings to let it continue. And then when it broke up above, there would have been a possibility to take a quick, breakout of this trend line if you'd like to. Both of those that we set up from the strat, if you imagine, ended up playing out in that manner. So interesting to look at it that way, okay? Now, with us breaking up above here now, but closing over here, you want to take a look as to, what could potentially happen with Microsoft, right? My prediction down here was if we broke down below, it would look like this. And so you could imagine it would be similar in terms of resistance lines above. We break above, we're going to test certain resistance lines before we can break out too, okay? So keep that in mind. It's never just going to shoot straight up. It's never just going to go straight down. You're always going to have buyers and sellers that push it back and forth, okay? So with it where it is right now, you can imagine at this line, does it break back into the channel? Okay, does it continue going up? Play your resistance and support lines, right? Like I said, it's never a situation where you necessarily need to predict the direction every single time. but you need to manage your risk and be aware that losing any sort of money in this situation, it's more important to protect your capital, okay? So one thing I will point out too, though, every time we end up building a big giant gap, there's always a possibility we'll come back and we'll fill it, okay? The previous gaps over here have already been filled. If you notice, Microsoft's big gap downs are a little bit different than SPY, right? SPY just filled this one, you might imagine, okay? But Microsoft had done it already before. The shape that it's taking is still in a very bearish shape overall, right? You still have this bear flag that is, you know, now we're near the top. That's not bad. Let's take a look at a bigger picture though. Are we actually in a situation where you might assume that this is accumulation? I wouldn't necessarily say so. If you just look at our volume here, it doesn't quite convince me that the composite man has stepped in here to buy, right? You know, if this is going to take something in terms of 1, 2, 3, 4, right? Keep in mind, we technically could argue that if it breaks back down below, that would be wave 1, wave 2, right? Remember how I was showing you on SPY? You can kind of look for, and these other ones, you know, 1, 2, 3, 4, 5, maybe, and then A, B, C. Okay, let's do A, B, C in a different color. A, B, C, and then you have another 1, 2. Let me 1, 2, 3, 4. This could be a long 4, right? And 5 could be further down, or you could imagine this could have a 1, 2, 3, 4, 5, and we're now doing A, B, C. Okay, so but keep that in mind too. If that's the case, we still could have 1, 2, 3, 4, and then a 5. So don't be, you know, is there a potential for a wave 4 ending here and then a potential wave 5? I do still think so. But the thing about some of these bigger companies I want to point out, all right, is they're going to start to do buybacks, you know, share buybacks to kind of keep their price up. So that's one thing. If a company is buying back their stock, you might want to think about how that keeps the supply of their stock a little bit lower, you know, lowering it, therefore keeping the price of each stock higher. And as a result, this still has a chance to, keep in mind, come back up toward these levels before retesting, okay? And again, it's when it breaks out or breaks into new channels and retest, that's where we want to take good positions to go into, right? So this past week, breaking up above previous levels gives you those chances, okay? Now let's go into Google. So I was looking at, so that downward was already charted from before. I never removed it. But what I had shown you for Google was that if it's breaking down below in this flag, if it breaks back down below, oh, this got moved a little. This was here, okay. So it depends on if you want to count this wick, but if you didn't completely count the wick, look at this here. You have the breakdown, you have the retest of that line, and then the breakdown. The breakdown aimed for these last values that you could have targeted, okay? With that also, earnings, look, earnings for Google are red. How come it popped like that? Well, when you're expected to make $70 billion and you only miss by $1 million, that's not bad at all, right? That's a very narrow miss, even though it is a miss, okay? Also, this isn't bad at all. 4% in terms of this, you know, per shares earnings is still over $1.20. $1.20 missed by 6 cents. Comparatively to a lot of other companies, that's not very, you know, that's not bad, right? Versus a lot of some of these other companies are doing much, much worse. So what could you imagine, right? Now that people are pricing the thought of, hey, you know, people standing here are starting to think, hey, earnings is coming up. Maybe I need to get rid of it because it could be bad. Oh, hey, it's not as bad as I thought, right? Look at, you know, also you've got all these people that are buying and selling here, okay? And as soon as it comes in and it shows that it's not as bad as everybody expected, then we get that pop, okay? So I was telling everybody, and there's people that want to gamble with earnings and such. You can keep that, you know, keep that in mind. It is a gamble. The earnings themselves isn't just red or green, is not an indicator of how the stock is always going to react, okay? It's always going to be context. It's always going to be what people expect moving forward, all right? Now, I also want to point out, because a lot of these, if you click on here and go into extended trading hours, you got to take a look into what happened after the news, right? So if I just zoom in, let's go into like a 15-minute, we'll go 5-day chart. Oh, that was 5 minutes. Okay, so here's earnings, right? Look at this. 1, 2, 3 days of selling off before earnings, okay? So everybody's expecting a poor result, maybe even 4 days when you think about that, right? 1, 2, 3, 4, 4 consecutive days of selling off right before your earnings. As a result, people pushed it down. You know, what if the real fair value of it was still up here, right? Because let's consider this to be a neutral square, a neutral earnings. Nothing was really that bad. Then we're headed back up toward previous values. Does that make sense? All right. So earnings, I was saying in the main chat, earnings and a lot of these things in the market don't have to truly make sense at the end of the day. And you also want to remind yourself, like I said earlier, when you have a lot of bearishness. So let's say here you got sellers, 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 okay? Google earnings turns out not to be too bad, okay? So some shorts buy, some more people buy. Earnings actually brings people to the market, right? Because fair value is actually still up here. It pops up. These people that shorted recently, that just sold the day before earnings, now they're underwater. So they now want to get out, right? They're afraid that it's not going to come back down. And so the next day, think of it this way. So Google earnings popped, relaxed, popped up higher, and then opened up here, okay? So you can think how these people are now that much underwater, okay? Now, if they end up buying back, these people are now underwater, right? These people are now underwater. And so what it does is it creates a snowball effect of people trying to get out in terms of the shorts that took their positions, now that the reaction has gone against them, okay? And Google continues to push out shorts until they want to take positions at one of these other, you know, higher levels again, okay? Shorts will step in sooner or later. Question is going to be where, okay? Question is where. If we take a look at this, we got to go into a bigger picture, something like the 1 month, because we've been moving around quite a bit, but we do have, let's go back up here. Yeah, there we go. We still do have some movement that could come out, right? So we broke back into this channel. We do have this previous resistance. Google is now retesting that downtrend line, right? So where's our next level? Obviously you can see it right here, right? That next level, if we break through that, then we can definitely head back higher, right? But until it breaks out of the full, and you also have this part of this flag, you know, a lot of our charts have this look, okay? here's the thing with this. We do have a lot of volume down here, and that was actually due to the split. But when you kind of smooth things out a little bit more, can you necessarily tell me that Composite Man stepped in right here? I wouldn't necessarily say so. And here's what has me a little bit more concerned about it on the big picture is there's still room for this to fall back down to a small, lower trend line. Google with that split, I do think that brought a lot of supply to the market. And at the least right here, I could see maybe us coming down back to this level. So just be careful. If we do break out of this flag that we're in right now, there could be this down to 100 and lower, which is very possible, right? This little part right here. So we're going to come back up. We're going to retest this first block up here. If we do break up above it, awesome. Economy is doing better, but I have my reasons for my hesitations. At the first step right now, if we continue to squeeze out shorts, we will at least do this test of this supply of this recent local high that we broke down from. If that breaks past, then the next step will be up to this one, okay? But you always want to remember, they're going to take their profits somewhere sooner or later, okay? So keep an eye on these indicators getting overextended, and that's especially where you want to keep an eye on. Now on something like the daily too, though, none of these are back up over 50, which means that we're not actually in any sort of bullish momentum, bullish movement just yet. We're still in a bearish trend. So look at this. Google's been going down or been struggling since over here. You can notice on my RSI has been in this specific situation below 60, right? But every time it breaks up above, it comes back down, breaks back. And in reality, this 50 line, it's spending the majority of its time down underneath it. And lo and behold, right? What you have here is you have this downtrend from this because it's down there versus your greenish above these lines is all this upward movement, okay? So keep that in mind. On the daily, if we haven't broken up above 50 on a lot of these, be careful. We're not really bullish just yet. This is just a bearish bear market rally. You want to keep that in mind. Now, if you notice my low stochastic, it's a lot harder to tell. So RSI has certain benefits to them, especially on looking back upon old situations and old price action. One thing also, you can notice that this, very similar prices all right here, and you have it, just creeping up. But we did also break back down, so be aware. There is still room for this to fall back down if we fail to find true support inside this flag, okay? Those resistance lines are important for you to keep an eye on. Now let's go into Meta. Meta had earnings and initially, reacted, throughout the day there's buying, dropped. And so, let's look at their percentages here. Still not too bad, right? But how did Meta react? Meta dropped. Okay, so how do you predict that, hey, this was a narrow miss? How come it didn't react the same way as Google? Well, I'll take a closer look, because this just happened. I haven't taken a very close look as to what exactly is shown in their numbers. But in terms of the expectations, Zuckerberg put a very big bet on the metaverse, and the metaverse still hasn't really started to make the money that it needs to. Another thing you got to keep in mind is the metaverse, and a lot of that stuff had to do with like cryptocurrencies and those tokens of sorts, and that's lost a lot of value over time as well. So the way I look at it is Meta is more based upon, just their ad revenue versus when you take a look at Microsoft, which has Azure, which is, I think that's like their web hosting. I need to double check, but they have a lot of other businesses within their business model that allow them to continue making money. Meta's whole, VR situation still hasn't gained the public's attention to that extent so far. So, you had this nice push up, and think of it this way, right? What if people were looking at the other? Okay, so first off, you did have that reaction. This drop here was from Snapchat having really, really bad earnings. And throughout the week, you went further down and had other earnings go, hey, maybe things weren't expected to be so bad. So maybe you think, this is how you might want to explain it yourself, is that, hey, we had earnings from Google and we had earnings from Microsoft from Tuesday night that people big money took Wednesday to react to it before this happened, right? Before the earnings happened. So this was the prediction. After seeing the others, you have your reaction, then you see the real situation. And so tomorrow we'll actually see, do we break further down for Meta or do we head further up? All right. Now, again, be aware that sometimes you can almost ignore the earnings of sorts and just think of it as, okay, so if that's treated as noise, right? Earnings and what they're reporting to us, we're already behind it. Okay, we're already behind their plan. Think of it that way. Okay, so what is the price trying to tell us in reality? What is the price trying to do? Well, geez, if you take a real close look at it, you had these bounces right off of this trend line. Is it surprising that we bounced up from there? Maybe not so much anymore. Does that make sense? So earnings can be a big, again, it's a toss, it's a coin flip, it's a toss up, because whether we have a big surprise or a big loss or we're close, there's always going to be some sort of front running, people dealing with the money beforehand. Okay. And so this right now, you can imagine with our after extended hours, where did we bounce, guys? Do you see that? Where did we bounce? We bounced right at the trend line just once again. So what are you looking for with open and Meta tomorrow is really going to be, again, both directions. We have this nice candle that now has shown that this is a possible price and this is a possible price, right? For after hours. So if we come down here and we bounce off of it, that'll be great. You can expect a small bounce where it relieves itself to, that could be a first aim, or this could be a more a safer aim, right? And then look for the breakdown and the retest of previous values of sorts, right? So if I were to just draw some lines in here for us, let's go regular trading hours. We already know that we've already come down here, okay? So what do we do next? My first expectation is a retest of one of our previous levels. It, lowercase, right? If we don't get too many bulls, everybody's like, oh, that's terrible. We end up with something like that and it breaks out of the channel. Then what of our next targets are already previously drawn out for us. You can expect bounces at each of the bottom of these wicks, right? As well as you can also imagine, right, like this wick here with some previous candles, or also where previous bodies open and closed are important for us to take a look at too. All right, so if we just continue down, I doubt we just go straight down, right? But from where we're at, very likely retest our trend line. If we break back up, awesome. We're just going to break back up in that direction. Keep an eye on bigger time frame RSI and bigger time frame your stochastic, but otherwise break down, break down, break down, out. But keep in mind, when we do these bear flags too, there usually is going to be a bit of a fight in this area. So it's not going to just go straight up. It's going to be more like this. Then it could just continue doing that and head back up. We could have accumulation here. So keep an eye out. If we have a lot of buying, right, they don't want us to break out of the channel. You do still have some buyers. So keep that in mind. This could be that level where they're just waiting for more, to buy more at. Otherwise, if it breaks out of it, the retest, the first breakout, that's always a nice little quick profit to make, but don't stay in those for too long in most cases. Look for that retest on something on a bigger time frame. So like a 5-minute or even a 15-minute is usually the better situation. 30 or 1 hour candles of those breakouts and closing well below outside of it, those are always great situations to show, hey, we closed on a red candle outside of this level. We favor those values right now. The candle body is outside, so you're looking for something like this, okay, well outside of this level, then that gives us more confidence that we're breaking out of it. Okay, we're breaking out of the main channel. Meta, let's go in a little more detail because I feel like these candles are a little bit too big for us to make a good decision as to where we might be bouncing. Okay, so Meta already, again, I'm going to show our extended trading hours. Notice that. Okay, so we did have that gap, right? Let me show you this gap. Okay, this was the gap, so it is right here. Notice what's really interesting is big money, drop the price ready, let it rebound, and it's just sitting right here above this gap. Okay, so how it treats that, technically on the after hours, the gap has been filled, but does that count? Do you want to count that? No, because after hours doesn't count as all the marbles in the jar. Keep that in mind. The people that are willing to buy and sell in this range still haven't really appeared. They're going to show up during the market hours. All right, and so as a result, we're just going to use these, right, as a quick idea of what's going on. We expect ourselves to open up somewhere in this range. Okay, and what's a good chance? We're going to go and test the bottom of this range. And what's a good chance is if we have this big gap that suddenly appears, right, we're going to have a gap up here. We still have a chance to go back up before we head back down. So just be careful there. All right, if we gap down so much, we now have gap here and we have gap here that give us some solid moves. What's a good play? Go back into the gap. Let's go toward some of these previous candles. If we go down in the gap, let's head towards something like that. All right, so let's do that real quick. So wherever we are, if I had a short position that I would potentially take, you could say breaking into this, we could at least target a quick $2 move almost, right? $2 move, and keep our stop loss. You'll have to use what candles appear during the day to make that decision. So give yourself at least a 15 or a 30-minute candle or an hour candle at open to help make those decisions, or at least get an idea what the buyers and sellers are doing through that day. Now, if we happen to break above, right, we have some sort of gap that we create, we break above, it would be a target to fill that full gap. But I would point out that the reaction with Meta, right, you might have some people trying to hit that sell button right before you get back up there. Maybe some people got trapped. So you might not necessarily want to aim for those people so high up. I would actually aim to try to get up before this big supply of people hit, right? And so you do have some potential moves that you could take and potential directions that you could aim for, just with Meta tomorrow. This is on the 15 minutes, so keep that in mind, okay? But yeah, we already have this big yellow candle came down. You're expecting first some sort of bounce, right? the after hours people did not take out all the buyers and sellers sitting at this line. There's still going to be more, right? But if we break through, we're headed further down. Okay. Apple reports tomorrow after work or after close. So look at how similar a lot of these are, right? Tech names tend to react similarly at the end of the day because you get a peek into what's happening. So you have this bearish expectation with the week, right? Because we also know this was the Fed meeting. So near, Thursday, Friday, we sold off a bit. Monday, Tuesday sold off a bit, okay, right? 155, 156, down all the way to one. This is a $5 drop already. And then what ends up happening? We end up with the news about Google and those. And so, hey, if Google's still doing pretty decent, Apple should be doing pretty well, right? And so you have the same reaction from those, and they pump up and pump up. You had one nice big pump up today, right? Because they're now getting ready for the earnings. Now with the other reactions, hey, it was good news. But now what I want to point out, what could potentially happen? We could just get way too euphoric about the good news about others. And what if Apple doesn't show as good of earnings? Then this could head back down, okay? Now I will point out Apple as a company pretty much does their best to maintain their value. So I don't necessarily see it coming back down as hard, right? What I do want to point out though is we do have a gap here that has now formed. So coming back down here could be possible. My previous prediction of us coming back down toward this trend line, we did break down a little bit. We headed further back up. We broke up past what I thought would just be essentially this previous supply could push us down. Now that people are getting squeezed out, we got to take a look as to where our next direction could be before we're going to get pushed down, right? And where do those people stand for Apple? Well, let's take a look. Apple, right? We do have a lot of people sitting all over here. So we are right at about where we would expect there to be people pushing back, okay? We still have a little bit higher to go, but in terms of on a daily, we're smacking into that resistance. Look at that right here, okay? This move up was so strong, okay, it was strong and was strong, but now we need a little bit of relief, and we'll see what the earnings is. We could still head back up, right? But how high we go could show how hard we reject too. So I want to point out here with the indicators too. This, if we keep, we go higher, or right, notice here, if we turn around, that's negative, okay? Keep that in mind. That's a negative divergence on the daily. Another one here too is this is kind of flat. You still have higher here. So if this ends up turning around and has lower, but we end up on this up here, we end up with higher, right? Higher, but lower. Expect a break out of this trend, retest and head down, some form of head and shoulders type of situation. Now here's another thing that also kind of gives that intention as well. So you have this 1, technically 2 and 3, these 3 here and these 3 here. And then you had your short covering rally that broke past these 2 levels. Do you see that? So where this goes back up to? Where does this relief head up to, right? It usually heads back up to the previous levels where everybody else is sitting, okay? And in this situation, that's this. Okay, that makes sense? So Apple right now is at a prime location in which reversal is very likely, but we still, it could come up to like what, 160 or so before you get some real big pushback. But as well, here, let's pull up GPVR. Right, do you see right here? We're breaking into some bigger volume right up here too. So 157.53, you already had it bounce off of that. So if we keep breaking up higher, we'll start to really get rejection here at 159.77 right here. You got your really large volume of people. So real pushback right there. You see that? Okay. Will we get all the way up there? This is saying RSI says we still have some room. Stochastic says we could go back up, but we're already starting to show that we want to head back down a little bit. And then take a closer look too. So we're going to go into something like the 15-minute. Tomorrow with Apple, I'm expecting Apple to come back a little and retest this breakout. You've got this breakout right here that we're going to retest, could head further up, but remember we could have rejection up there. And if we do break down, watch for that too, right? Watch for the retest. This line and this block are extremely important right now. If we break back down, we're going to start involving these people down here again. But if we break back up, we're going to retest and we're very likely going to get rejected right before 160. I don't expect it to hit 160. Expect the sellers to step in when we get there. All right. And then earnings, right? Now, if we think about this, people have already priced in the expectation of earnings. So what it does when this does come out, I would think about how there's a, okay, so if we end up with some sort of report where the numbers are still flat compared to before, we don't get too big of a percentage change. So within, I would say 3 to 5%, right? Just like with Google, just like with Meta, what I would expect is us to go and retest that upper range. If we end up with some bad results, this is really bad, then of course, I think we're gonna head further down. Okay, we'll break out of this trend fairly quickly. But Apple isn't the type of company, I would say necessarily with that type of leadership. So I think we come back here and we head up to this, and then we really retest this, and this to determine if we're going to head up further or not. Okay, it's really dependent upon how we view the earnings for Apple. Again, if you're going to play Apple, it is a gamble because you can never predict exactly, you know, even if you think, okay, they've sold a ton of iPhones and they're doing great with that, you don't know their balance sheet at the end of the day. And how the public reacts to it, how big money pushes it around, can very often be the opposite of what is reported. So keep that in mind. It's, you know, a better choice to wait for earnings reports and then deal with the price action the day after, because afterwards, what will usually happen is you already have these lines drawn in the sand of, you know what, if it's really that bad, then you can kind of expect us to, the moment it retests this low here, take puts to go down because you are expecting it to go further down, right? Or if it's really, really, really good, you get some blowout numbers, then the moment it breaks above here, you can take that quick move up or look for a retest, you know, in terms of smaller number RSI or stochastic and play the upside in that situation, right? So waiting for the earnings and waiting for the day and using what happens during the day is, you know, a better situation versus trying to gamble over earnings. Never guaranteed, even if you guess the right report, it's possible they already front ran everybody. And it doesn't have to make sense the direction that it goes, okay? So, you know, if earnings ends up just being slightly better, it still could be lower because they priced in a bigger number than what we expected. So uncertainty around earnings isn't what you're trying, isn't a good risk to take, but the volatility and the amount of people that are willing to trade through the day as earnings have been reported is something that you want to take advantage of, right? So if there's a lot of people willing to trade on this day, why not get in, okay? Or right before it, but try to get out before or don't get in until after, all right? Any questions about what we went over today?
No, self-explanatory.
Cool. Everything been good with your trades? Any updates that you want to share, or how's things been?
Haven't had time to do it, but I've been
That's fine.
studying the charts lately.
Cool. Anything in particular you want me to go over before I finish up?
No, I was gonna say about Apple actually.
Cool. Yeah. Now you see with Apple, you see where the people are standing. It's, we've had a nice move. If we break through this white trend line that we have, that's your signal to start looking for those puts. And another thing to look at too is you're going to now compare. You always compare these peaks here, okay? And you start to look at them. I'll go into a bigger time frame. Start to see where you really run out of buyers. If it starts to really go further and further down, you have a large peak here, but then here you have much, much, much lower. You're running out of those buyers up here, and it's likely to reverse. So keep an eye on the volume. If we get a big, big drop, right? So think of it here at the top, you're starting to run out. You're starting to run out. You're starting to run out. But here you came back down to the line. They pushed it back up, right? We do have some green volume coming in. So don't fight their trend. You can go with calls and aim for that 160 if you'd like to, but just remember where we get that full rejection can be pretty quick if people have their finger on the sell button up there, okay? But just be also very careful on the bigger picture. Notice this. This is kind of, this could be months ahead of us, but we do have kind of this, I'll adjust the head in a moment. We do have this bigger head and shoulders formation coming. So if we come back down here, we very potentially could have some more pain to come. But with the way that Apple's reacting right now, we'll see. If we break up above, we could head up higher. But there is that price resistance of people right up above. So keep that in mind. All right. Okay. I will upload this for the ones that need to watch it. We will aim for Sunday. Let me go think about it. Sunday. Yeah, Sunday night, we should be able to do that charting session. If I have to change anything, I'll let everybody know in the chat. But as of right now, Wednesdays and Sundays, if anything does come up or I need to switch it around, I'll let you guys know. Or also, sometimes I'll do just a pre-recorded one and put it up for you guys. That way, you guys can be prepped for the upcoming days, upcoming weeks. All right. I will chat with you later. You have a great rest of your day, and be sure to ask questions if you do come up with anything that you still need clarification on.
Okay, sounds good.
All right, talk to you later.
Okay, thank you.